working? It's weird. All the settings have changed since yesterday. Everything. All right, so do we have sound? I guess I don't even have chat now. Kind of see you guys over there. Let me grab that link. YouTube has me in the wrong. All right, so look, are we finally? All right, good. So I'm here. Please confirm you can hear me. Momentum more. Oh, good. Yeah, the music's very, 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 very loud. The walls are shaking, in fact. All right, let me turn that down. All right, good morning. FXStreet. Come tell-vous, how are you? My name is Wayne McDonell. Remember, you're gonna die. So that means let's make today count. I'm a currency trader, just like you. I roll with good company. I know most of you in the chat. I also roll with Trader's Way. They're a foreign exchange broker that doesn't trade against you like most brokers. Most brokers laugh at you when you lose money. Trader's Way is an ECN, so hey, when you pull the trigger, they put you into a liquidity pool, and that's that. Symbiotic relationship. Therefore, they hope you succeed. That's why I like them. I'm also developing some artificial intelligence to help traders trade. And it's so good, you'll probably get banned by your broker. So be careful. But if you work with an ECN, they're happy if you succeed, even if you have an edge. Sweet. So yeah, good morning, Kenya. Very cool. Good morning, Dubai. Or I guess good afternoon. I'm overdue to visit both places. Never been to Kenya. I've been to Dubai many, 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 many times. It's the second home almost. Kenyatta. Yeah. Philippines. Yeah, I'm due to visit the Philippines. I haven't been there yet. Maybe drop down in Cebu. Jumbo, Mr. Wright. All right, so this is Non-Farm Payrolls Live. I've been doing this for about 20 years, this one webinar. So I'm older than your guru. In fact, I've probably been trading longer than your guru has been walking. Yeah. So anyway, so you can ask Uncle Wayne some questions. I have lots of trading experience. I love technical analysis. I have a master's degree in financial management and a bachelor's degree in macroeconomics. Yeah, I bet, Jay. Are you from Cebu, Jay? Zambia, huh? Uganda? Yeah, I'd like to I'd like to get out that way. I've been to South Africa. I'm going to North Africa in a couple of weeks. So now I just got to fill in the gaps, right, guys? Well, so I'm going to Morocco, so I thought, well, then the next trip's got to be Egypt, right? Catch all the corners, and then we'll fill in the gaps. Nothing can go wrongo. I'm in the Congo. So anyways, hey, so let me know how I can help. I can answer a lot of things, even if it's sort of esoteric kind of questions. I can do that. I've made probably more mistakes than you have, so I can share the good, the bad, the ugly, the pain, and the joy. Joy and pain, sunshine and the rain when it comes to trading. Done it before. So the bottom line is, let me know how I can help. Now today we have non-farm payrolls, and it's it's an economic report, and we are sensitive to it right now because we are trying to discern monetary policy. But the truth is, we're always using these economic data points to discern macroeconomic policy. The question at the table is, when will the Fed cut? Okay? Wizard says, hey, Uncle Wayne, I've been scammed by 7 gurus. Who? Who scammed you? Do I know these guys? Is today's NFP positive? Well, Mark, how would I know what the answer is? So I wrote an article, I don't know, 6 or 7 years ago, maybe 10 years ago now, and posted it on FXStreet about how to create a model for non-farm payroll so that you can have an educated guess. So that's easy. And then FXStreet took the ball and then actually did a lot of development work on their website to help you do it. Okay? But it really doesn't matter. Okay? It doesn't matter. We want to know when the number comes out. A good number, a big number is bad because the market has priced in cuts. So if the number is good, it's bad because the cuts aren't coming. If the number is bad, so it's lower than expected, then the numbers, then that means the Fed can cut. So bad is good and good is bad. Now, I did develop some AI. I did. To actually help you address this. How many people like to scalp the news? Scalp the news and trade the news. Not necessarily always scalp, but somewhere between 2 and 4 hours on the back of news. How many people like to do that type of trading? Because I have AI that's going to help you. Okay? I need you to put your name on this list. I'll show it to you today. It's not available. You can't buy it yet, but I have it. It works. I just haven't released it yet. So if you want to, I'll show you today, but if you want to be notified when it becomes available so you can check it out, you need to put your name on this list. Okay? And there's the... Okay? I posted it, but I think I'm blocked by the moderator. Not sure. What is it called? Let's take a guess. It's blurry? What are you on your phone? Yeah, Tradars. All right, so I have the site actually working. That's not it. On the staging site, and I don't want to give a full sneak peek, but you guys can't see it. Traders.com. I posted it, but then there's a little tool thing next to it. So for some reason, I guess I'm not allowed. Oh, error. That's interesting. I've never seen that. There was an error in the chat. Let me see if it's still there. Traders.co. There we go. Never saw that before. YouTube had a chat error. Anyways, you can check it out. Okay, so we have non-farm payrolls coming out in 43 minutes and 31 seconds. So I have a countdown timer. Let's see, Vanguard. What's your best guess? Is it free? No. Hang on. Okay. So let's go through this. Yeah. Yep. Yeah, I'm going to charge money. It'll be as low as 20 bucks, actually 19. As low as 19 bucks. Okay? Anyways, let's talk about this. Non-farm payrolls, if the actual is less than 200,000, hang on, we'll get to this. This is Quant box. Okay. I'll zoom in here so you have some eye candy while I talk. Okay. All right. Let's do this again. What is your favorite pair, dollar pair? It has to be a dollar pair. What's your favorite dollar pair to trade when it comes to non-farm payrolls? Euro dollar? See, Jay says, I think today, I don't even like the language. Please don't speak like that around me. What do you mean think? Not interested. Now, if you have research, we can talk about it. We don't have opinions here. Okay? Euro, dollar, NASDAQ. Okay, I can't do NASDAQ. It's a dollar pair. Dollar, yen, pound. Well, okay, let me just tell you, because you guys are split across the board. Okay, if the actual is less than 200,000, based on what has happened in the past. Now, let me preface this. Okay? Trading is risky, not appropriate for everyone. Past performance is not indicative of future results. Okay? But according to the past, Aussie dollar has always gone up. Euro dollar has always gone up. Pound dollar has always gone up. Kiwi dollar has always gone up. Always. Over the last year. Or I should say the last 12 incidences in which non-farm payrolls was less than expected. USD CAD always went down. 2 hours, 4 hours, and 12 hours on all of these. Okay? And if the actual is greater, 75% chance of up. In particular, on USD yen. Okay, it's not a guess. Okay, it's what's happened in the past. So it truly is research. Okay, so let me take a screenshot because you're like, dude, I don't know what you're talking about. well, again, I'm using artificial intelligence to automate the process of telling me how to be prepared for this news event. So I'll bring it up. So this is my, what I call the scalper, non-farm payrolls, okay? And I can click through and I can pull up all the charts in the past and show you what has happened in the past. It's now 39 minutes and 31 seconds away. It's cool, right? So let me take another screenshot for you. Okay. So if actual is greater, 75% chance up. If actual is less than, 75% chance down, based on past performance for USD yen. See, this is USD yen 15-minute chart. And I can go through all the different months, and I can show you all the charts. Yeah. That's just one little tool, but powerful. So it's got years of chart data, 2 hours before and 2 hours after every major news event. Then it looks at all those charts and looks for recognizable patterns inside the charts. And when it has them, it tells you what you should watch. So I have a calendar that has every news event, but I also have a calendar that only shows you the news events that you need to trade. How many people would appreciate that? It cuts out all the fluff. It only shows you news events coming up in the future, in the next week or two, that has a recognizable pattern based on past reactions to those news events. So I can tell you, this goes out to the end of March. Let me just give you a quick glimpse. These are the news events that you care about. That's it. Going out weeks in advance. And then I can give you the history of every single one of those news events. See, it's a database. It's actually doing the research. So look at this. If the actual is less than 75% chance, the trend will be up. If the actual is greater than, then 66.7% chance the 12-hour trend will be down. So it's setting up a swing trade. Anyways, it's doing the research. It's cool though, right? So it even tells you how it gets to its conclusion doing research. It's not guessing. You understand? There's no guess. No, it truly is awesome stuff. All right, cool. So thank you, artificial intelligence, for changing the world. All right, so let's go back. This is not about technical analysis right now. You guys are asking really good questions, and those questions are fundamental. This is another AI service that I own. So, right? Nahum wants to know about gold. This is what I think about gold. In fact, I don't think anything about gold. I only know the facts. Okay? So buy or sell. Now, first of all, why don't you know? You should never ask anybody what to do. You're the boss. Let me know if I'm wrong, but I think you're the boss. And are you asking some YouTube idiot what he thinks about gold? I would never ask a YouTube idiot. Okay? So here's what I do. I don't tell you what I think, I tell you what I know. This is gold. Okay, so when you look at the Commitment of Traders report, retail sentiment, seasonality, technical analysis, the economy, inflation, interest rates, and the labor market, it's bullish. For example, we know institutional investors are 74.57% long. 3/4 of all institutional investors trading gold are long. And dumb money is short. Well, you know dumb money is wrong. Okay? So you guys have lots of good questions. Is it going to be bullish? Is it going to be bearish? Do you have any money? I can give you the tools to answer these questions all day, every day. Just insert money. What's the big deal? Cool. So this cost an extraordinary amount of money, obviously. I'm pulling this from dozens of different databases, right? So you're asking questions like, should I be long or short oil? And gold. And well, you should already know the technical trend is up, and you have a base case, a worst case, and a best case scenario already planned, right? Okay. So, based on what has happened so far, this is the reality. We are above a simple moving average on a daily chart. It is trending up with a positive integer. So let's do the math. Okay? Y equals mx plus b, which means this is calculus, so you got to look at it in a grid form. Okay? Y and x are the axes. M is the intercept. M is the slope. B is the intercept. So, you got to calculate the mean. Okay? And then you got to calculate the rise over the run. Rise over run. So M is equal to rise over run. Okay, and we call that slope. X and Y, right? And then the intercept. And slope tells you where you are in this, chart. Okay, cool. So that doesn't give you anything except linear projection. So that tells you, if nothing changes, where the price will be in the future. But now we're trying to create a worst case and a best case scenario, correct? So now what you want to do is, now that we have the slope, you want to calculate the variance from the mean, and mean is just average. You calculate the variance, okay? So now you calculate the variance, the average variance, how far is price from the average, and then what do you do is you want to standardize the variance, okay? You standardize the variance. So what you do is you take the var, whatever the variance is, and then you take the square root of the variance, which is equal to standard deviation. Variance and deviation standardized. So now you get worst case scenario, which is the square root of the variance, and the same distance above, okay, which is the square root of the variance. And so now what you do is you get this. Now you know worst case scenario will be at 2167 in a week, or will be at 2281 in a week, or somewhere in between. Okay? So you're asking me all these questions, and they're really good questions, but you either know fundamentally or you know statistically. Okay, they're good questions, but I worry that they're open-end questions like, you don't have an opinion on gold, so you want to know my opinion. Well, that's dangerous. What do you mean you don't know? You don't know? You don't know if you're a bull or a bear, and you change your mind all the time? Dude, I'm going to guess that you do not have consistent results. Okay? That's my guess. Let's do a quick around the world. Yields are down to 409. Very good. So that's working out really well. I want those yields to be falling. That's really good. Oil having crazy volatility, but if you look at it on the daily, it is still riding the 21, but boy, oh boy, it's up $3, down $3, up $3, down $3. But again, on the long term, actually doing what it's supposed to be doing. Yes, Matthias, right? How do you trade when, and let me pull that up right now. How do you trade when you have mixed risk on or risk off? So this is what Matthias is talking about. All right. When we look at the dollar index, daily, weekly, monthly, yields, daily, weekly, monthly, gold, daily, weekly, monthly, yen, daily, weekly, monthly, volatility, daily, weekly, monthly, and the S&P 500, daily, weekly, and monthly. We are looking for correlation amongst these assets, and we're looking for correlation over 3 time frames. And across the board, there is no evidence of an underlying intrinsic trend. Okay? And I've known this for 5 weeks. Actually, it's probably 6 or 7 weeks now. And so I've been a tightwad. I've been tight with my trading because there's no underlying trend. So now how do you trade? Well, you could just not trade, but that's hard for a trader to not trade. So what you end up doing is short-term relative strength or very, very long-term position trading. But if you're doing something in the middle, you're not getting follow through, right? So you have 1 or 2 days where you make money and then 1 or 2 days where you lose money, and it's very frustrating. It's because there's no intrinsic trend. You're floating at sea with no wind and no current. So you have the wrong expectations for the market. You're not reading the market. Okay? So that in of itself should shape. But there are trades. So like, for example, we were talking about gold earlier. Let me show you something. Let me show you. This is your brain on drugs. All right, gold. Okay? Gold. Gold. By the way, are you enjoying this? You having a good one? Okay. This day here, actually, technically it would be this day. All right, let's do it that way. All right, this day here, the 21st, somewhere between the 21st and 23rd. Okay? You can see Quant box. This is Quant box telling you the past. That's why I call it the back tester. This shows on that day, Quant box became bullish on gold on the 21st of February. So here we are, and I go back, and this is, I have it marked, that's right here is when Quant box went bullish on gold. So again, you're asking me my opinion. I'm like, dude, what do you mean opinion? I don't have an opinion. Who needs an opinion? I'm trying to watch the clock. Yeah, we got tons of time. Who needs an opinion? I don't have an opinion. I don't even like gold. There's 3 trades open up here. Okay, there's 1 trade here. There's 1 trade here. There's 1 trade here. Okay, so I'm just kind of tickety-booing as we go, milking the cow. Okay. Yeah. Actually, you're talking about the COT data. That's at the CFTC. All right. Well, so let me bring that up. So now I have a question about the Commitment to Traders report. How many people here read this every day? Or, I mean, I should say every week. Okay. I'll show it to you. CFTC.gov. Okay. Cool. So you go right here, Commitment to Traders report. Right? Open interest for markets. So this tells you where all the institutional investors have their money. I've been downloading this for more than 20 years. Okay, so you go here, traders and financial futures. Futures only, you don't want options. Okay, and here it is. Let me give this to you. This is current. I used to download this every week. Okay, so for example, okay, let's look at some of these things. Japanese yen. Okay, asset managers, hedge funds, and it shows you total contracts open, right? And you can go to like Australian dollar. Asset managers, hedge funds, Mexican peso, Brazilian real or real, New Zealand dollar. Okay, hedge funds have 15,138 contracts long, 12,300 contracts short. So it's neutral, right? Here's the change week over week. More got short, less were long. So we lost bears. Sorry, we lost bulls and we gained bears. Well, that's important, isn't it? Isn't that important to know how institutional investors like hedge funds are trading the Kiwi dollar? We lost some bulls and we gained some bears. Okay, South African Rand, Dow Jones Industrial Average, okay, so on and so forth, right? Cool. So I've been downloading this spreadsheet for 20 years. But then I got sick of it. And I said, I want to automate this. And I want it to be pretty. And this is my Commitment to Traders report. It updates automatically. And here's one reason I'm long gold. Because institutional investors are long gold. They're long oil, they're long the Dow, they're long pound, but they're short the yen, they're short the Aussie, they're short 10-year Tino. I'm also short the 10-year Tino. And money has come out of SPX, that's the S&P 500. It used to be way left, but now it's way right. NASI is coming down. There are less and less bulls on NASDAQ. It's basically neutral. And S&P 500 is gosh darn bearish. So, wow. Okay, now this is the total. This is like the number of contracts in the vault. It's the stock of contracts long and short. But we also are interested in the flow. And so what you want to be able to do is sort by the biggest flow of capital is actually back into this. Okay? And then the biggest flow of capital out is out of NASDAQ. Out! Out! Money's coming out of NASDAQ. Oh my God! We lost bulls, and look at the number of bears now. Holy schnicker-schnacker. And then, of course, you can then look at these assets. This is euro. Okay, euro in green. Dollar in red. And, okay, money has been coming out of euro for quite some time. Look at that. Money's coming out of euro, but it's been coming out of dollar too. And it's been converging back up. Now, here's the cool thing. Let's just pick something. Pound CAD. Now I can see pound CAD. Okay, a little bit of money going into pound. It's bullish. And CAD has gone from bearish to neutral. And I can see the change week over week. Pretty flat for the Canadian dollar. And we've lost some bulls on the pound. Cool. And I have this for every asset on the, right? Every tradable asset you need. I got it. Okay? Check that out. Money going into New Zealand, money coming out of Japan. Now that is a pretty trade, isn't it? Oh my God. And you want to know what I think? I don't think. I have information. I don't think, I know. Thinking's for amateurs. I know before I do. And now I have AI, which will then do the technical analysis for me too. Can you imagine I have AI automating all my fundamental analysis, and now I have AI doing all my technical analysis? Dude, I'm going to be a killer. I'm going to be a killer. So anyways, this is quantbox.co. Somebody wanted to know how to use the dot plot. I saw that question. So that's in QuantBox training course. The scatter plot, I think you asked about. Scatter plot analysis.
Class that you see here in blue, in that upper right quadrant, QuantBox expected it to be bullish based on all its analysis fundamentally and technically, and comparing all those fundamentals with the other asset in comparison. Everything in here, like Euro Kiwi, USD CAD, USD Yen, Euro CAD, QuantBox is expected it to go up. And they are up.
Right?
Positive times the negative is an...
Let's do it here.
Oops, yeah, actually I got this one. Hang on. A negative times a negative is a positive. A positive times a positive is a positive. A negative times a positive is a negative. And a positive times a negative is a negative. Do you guys remember doing that? Probably. Hope so. It's multiplication. But this is an important aspect of calculus as well, and this is kind of doing some calculus for us, but let me explain. You're looking at the...
I mean, cool, right? That's in there. So I got you covered, bro. All right, cool. Hey, good morning, Adam. Where did I learn to use? I didn't program it myself. Matthias, you just hire engineers. If I want to build a bridge over the Mississippi, I don't do it myself. I don't have those skills. I have money. How much time would it take you to grasp? Oh, well, I have another service for you. I know, well, you guys are asking. InvestorBootcamp.com. Log in. Okay. There are 2 courses for you. Go into the training courses. You want to do two of them. Central banking fundamentals. Okay. And there's 10, 12 lessons. And they're about an hour each.
All right, well, if you're in the room to see how to trade Forex using macro microeconomics, you're in the right place. As I was just saying that this is really into macro.
So I'm giving this lecture in front of, I don't know, a couple of thousand people. You can hear it by the mic. Oh, here's another one on fundamentals.
All right, well, welcome everybody. If you're in the room to see fundamental Forex trading strategies, you are in the right room.
Oh, I remember this. This is in the grand ballroom at the MGM in Las Vegas. It's like the size of a football field. The reason this is so blurry is they're zoomed in from the back of the room, but you couldn't throw a frisbee that far. It's like a quarter mile away. That's how big this room was. Anyways. So there's these lectures. So to the answer to the question, how long until you understand fundamentals? Watch this one. This is, well, actually, this whole course is about 12 to 15 hours long. So watch that one. That'll give you a basic start. Let me back up a little bit. And then you're going to do macroeconomics principles. And a lot of this stuff is straight out of my Harvard classes. And some of it gets to like graduate level work. So like going through these solo growth models, you know, is actually quite impressive. Hang on, why is it not moving? Interesting. What's going on? I'm having trouble playing it. Interesting. Maybe because I'm streaming. But anyways, it's very good. I mean, look, it's no joke, right? Like, it takes me about 3 hours to go over the solo growth model. Okay? I mean, it really is good stuff. I'm not even joking. So I can teach you a lot about fundamental analysis. It would take you about 30 hours to do the lectures. Nah, 24 hours. How about that? It'd take you about 24 hours to do the lectures. Do you know what the cost is just for those, right? So these 2 courses are included with all the courses. It's $88 for everything. I mean, like, it's so stupid cheap. I don't know why you guys haven't signed up yet. Most people here, actually. You need to, dude, you need to know this stuff. It's not pissy little videos. These are like serious college level lectures, but I dumb it down, but it's not dumb. You know? So there you go. These are for the people that have been asking. Okay, wizard? Yeah. Cool, so let's move on. Let's, well, I guess we can do the rest of commodities. I guess I can just show you this. Okay, this is gold. So as I showed you, Quant box has me bullish on gold. I didn't even want to buy it. It was just Quant box did it. So we have the up, 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 down, down, buy, up, 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 down, down, buy. So you can see my entry. Okay, up, 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 right? Down, down, buy. You can see my entry. Up, 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 down, down, buy. You can see my entry. And now we're in the up, 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 up. The target, you can see I have the targets already indicated. Okay? So look at, the buy is here. This is the target. You can see I have it drawn. It says conservative target. Here's the conservative target. Here's the conservative target. Here's the conservative target. These are my entries. Beautiful, right? Okay. So if I were going to buy again, okay, I'd like to see something like this. I'd like to buy it around here. Now you're like, but what? Yeah, that's a trade for Monday. Okay. Today's trade is green zone to target zone. And you can see it. Profit, target, conservative. Bullish, profit zone, aggressive. Here's the conservative target. There's the conservative target. There's the conservative target. It's beautiful. So Monday's trade plan, ladies and germs, looks like this. Cool. So my goal today is maybe I get an opportunity to buy a dip. Is that right? It sounds bad, right? Oh, you know what? I think I know what's going on. It's using the wrong microphone. Let me try something here. Okay, hang on. It's using the wrong microphone. Hang on. Where's the microphone? I don't know if it'll let me switch it. Hang on. Let me try one more. All right. How is that? Yeah? In sooth, I know not why I am so sad. The rain in Spain falls mainly on the plains. The ants in France stay mainly in your pants. Okay, we have a few minutes left. Denise says it sounds better, but it doesn't sound like you think. You're not commenting like it sounds amazingly better. I spent a lot of money on these stupid microphones, and I'm surprised how not amazing they sound. This one's not good. Echo. Why would there be an echo? Hang on, let me check. All right, this will probably kill the echo. Yeah. Cool. So anyways, let's see. We have 3 minutes and 21 seconds. All right, good. Jackpot. So I'm watching the countdown here. This is the scalping tool. Cool, right? And so what it will do is when the news comes out, remember it's looking at greater than expected or less than expected. And when the news comes out in 2 minutes and 27 seconds, it'll delete based on what the news was and only show you what it thinks based on the actual result of the news. So it's going to delete all this and then show you a page kind of like this based on what actually happens. And that'll happen in 2 minutes and 3 seconds. So this is my staging site. It'll launch probably in a week and a half. Oh, thank you, Brad. Yeah, it's just what I've been teaching for 20 years. I've done, 250 webinars on FXStreet alone. If you add up the amount of training I've done just at FXStreet, I bet you we're approaching pretty close to 1,000 hours. So you can get all those for free, right, Brad? And if you go back 15 years ago, I was trading the exact same way I'm trading now. Yeah. All right, 50 seconds. Yeah, more than 1,000 hours. Because like this, today I'm going to go for 3 hours. So this would count for 3 hours. So if I've done 250 just of these webinars alone, well, then that's 750, right? So have I done 250? No, probably not. So maybe it's more like 800 and something hours. But that's just at FXStreet. I have something like 5,000 videos on YouTube. All right. Anyways, 14 seconds. Shields up, red alert. Let me know if you got a number. $250, was that 275, Peter? So we know that's greater than So we want to focus on USD yen. Okay. Now these yens are definitely doing something different than the last 2 years. So that's the one downside to technical analysis is it doesn't think forward. Yeah, so 275, let's talk about that. That means the Fed is not likely to cut interest rates at the next meeting. Oh, but a downward revision. Ooh, that's going to create chop. Thank you for posting that, moderator. Appreciate that. Let's go to so the next meeting is coming up soon, March 20th, with no cut. May, only a 25% chance of a cut in May. A month ago, it was 50. Yeah. That's really something, huh? And now the real question is it going to be June? And there is a 74.4% chance of a cut by June. Don't forget we got kitty CAD today. CAD jobs. Okay, so the cut, according to the market, is in June. Some people either think there's 2 cuts by June or that they're going to cut by 50 basis points in June. Yeah, well, I'm okay with June. June is okay. Remember, in January, right, 3 months ago, I did a presentation outlining the entire year in advance with a focus on Fed cuts and the pace of cuts. I told you which months the cuts would arrive and not arrive, and the pace going in all the way into 2025. Cool, right? I charged $4.44 for this knowledge. Well, Don Pablo, if it's high, then the Fed does not cut. So you can discern what you think this will do to the stock market. Okay? So some simple math, if you will. The expected return for a stock is equal to the risk-free rate of return plus the beta of the expected return for the market minus the risk-free rate of return, right? Okay. So you can connect the risk-free rate of return to the Fed funds rate. We know there's a relationship there, so you could just substitute that for the Fed funds rate, or what most people do is the yield on the 10-year T-note, but we also know there's a relationship with the 10-year T-note and the Fed funds rate. So you can plug in whatever your number you want. But the thing is, if the Fed, or how about this, when the Fed cuts, it means this number, okay, this number, the risk-free number, falls. And what that tells you is the cost of doing business is lower. So if you have revenue minus expenses equals profit, what happens to profit if revenue stays the same but expenses fall? Let's do this logic. You can do this math, right? If revenue is the same but expenses fall, does it make your profit go up or down? Okay, cool. So in the same manner, if the cost of doing business, which is this, or this combined is the opportunity cost, so you have cost minus opportunity cost, those are expenses. So when the Fed cuts, the expected value of this of a business, like this is a business model, a valuation model, okay, the value goes up because its revenue would be about this would be the same, but its expenses would fall. So the profit or the value, because when you value is tied to profit, right? So anyways, the value of stocks go up when the Fed cuts. So we just got news today that the Fed is not likely to cut till June, and some people thought it would be March, and some people thought it would be May. Now they realize as of today it's not March or May. But I will tell you, if we had talked a year ago, and you could probably watch old Non-Farm Payrolls videos, I've never, ever, ever said like May, for example. Never. I have no idea where they, my best guess is those that thought the Fed was going to slash and burn interest rates soon were listening to maybe Governor Daley out of San Francisco or something. But do you remember this idea that I don't think, I only know? I mean, I don't know the future, but I do know the facts. So I can go to like, where did my Quant box go? Quant box. Is it on this page? No. Where did it go? Did I accidentally close my Quant box? It's probably on this page. No. Well, I'll just log in. Let's just do it over again. All right. Quant box. Talking about Quant box. So I'll log into the database. Quant box is not a website. It's a database. Now I have to generate the data here. Okay. And I'll show you central banks. I have a tab for it. Well, Don, maybe the market says, okay, well, that means the economy is good. So they're taking good news as good. Okay. Oh, error. Google Cloud having a problem? An error? let me try it again. Are they all having problems? Oh, what? Okay, that's working. Huh. All right. Well, I'll have to meet with the team. That's too bad. I was going to show you the data, but it ain't working for some reason. Is that right? Yeah, I thought this would be an error. Let's try it again. Quant box, log in. It looks like I have a browser update. Oh, is that right? Just hit F5. All right, thank you. Oh yeah, central banks. There we go. All right. So, let me tell you, I don't think I know. Let's isolate the US dollar here. This is the future. According to whom? There's the inflation forecast and the interest rate forecast. So let's talk about it. We're at 5.25 and 5.5. First quarter of this year, 5.36. So that's somewhere between 5.25 and 5.5. Then in the second quarter, okay, between 5.25 and 5.5. No, slightly. Not January, not February, not March. We've known this for a long time. So somewhere between April, May, and June, there's a cut. So that's either the May meeting or the June meeting. We've known this for a long time. And so now what you want to do is look at where we are inflation-wise, and are we doing better than expected or not better than expected? Okay. Where did I get this information? Is this quant box thinking? Is it me? Is it my opinion? What is this data? Where are we pulling this data from? Bueller, where's the data coming from? This is the Federal Reserve's economic staff projections. Staff projections from the Fed. So why do I need to think? I just know this is it. This is what the Fed has told us. And in particular, it's from the staff and the Summary of Economic Projections, which is the Federal Open Market Committee's opinion. This is why, like, it goes from like these weird numbers, right? 5.43 to 5.36. Well, it's doing the median of the FOMC member opinions. So the FOMC, the ones that make the decisions, talk to me, and I listen. And I only care about their opinion. And as the data comes in, they change their opinions. That's okay. So I just update the forecast. So I know precisely, this is the future, by the way, according to the FOMC. Let me say it again. The FOMC talks to me. And this is their latest opinion. This is what they have told me. And so I plot it. I don't have an opinion. I don't need an opinion. That's the future. And then when they have a new meeting coming up on March 20th, maybe they change their opinions. You know what I'm talking about? So I don't need to listen to a guru or some talking head on TV. I have it all plotted out. Okay? You know what I mean? It's gorgeous, isn't it? To be able to look at things like, oh, institution and retail sentiment. Look at that. That's probably something you need to know. Or organize your thoughts. This is probably a good way to organize your thoughts. Bullish, neutral, bearish. Probably want to know what's going on over a period of time. Bitcoin up 30%. Gold up 4%. 10-year T-note coming down. It's nice to see. That's over the week. This is for swing traders. You should probably know seasonality for the dollar and plot them to know if you're in position or out of position. Look at how odd USDN is right now. Yeah. But not only should you plot it, you should have it weekly. Huh? Did you notice that? So let's pick an asset. Let's pick no, nobody wants a footsie. Let's do USD CAD. Loading, loading, loading. Wow, it's having trouble. Google's slow today. I wonder if it'll pull Dow better. That actually comes from a different database. USD CAD, come on. There we go. All right. So this is the USD CAD, how it trades over the course of a year. The gray is what it's done. The red is the 5-year, and the green is the 20-year norm. We call this seasonality. It's month by month. And so usually the downward move occurs between March and April. Oh, is that where we are now? And is USD CAD falling? Yeah, it started early this year. And could fall all the way to Canada Day. And then it usually works its way back up. How many people find that that's useful information? To see the shape of the year in advance. I think it's pretty, huh? How pretty is that? Oh my God. That's the shape of the year for USD CAD. Now, there's two things to notice. When things are happening as normal and when things are not happening as normal. Should you adjust your behavior? I think so. But look at this. I added this recently. Here's the same data, not monthly, but week by week. I think we're in week 11, and it's usually an up week, but check this out. Up week followed by down, 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 down. 1, 2, 3, 4. You could have 4 to 5 weeks of this going from bullish to bearish. And we see it here. Oops. We see it here that there's a rotation somewhere in here, right? Okay. Well, I'd like to know more specifically. Well, usually, okay, that's around week 11. Right around this pocket here. Week 11. Well, that's now. Really? USD CAD goes on a has, we don't know the future, but USD CAD has gone on a multi-period drop. Starting in week 11? It tops out and drops on week 11? And this is week 11? So somewhere during this week, it tops out and drops for up to 4 to 5 weeks. And all we know based on past performance is it's somewhere in this time frame. Oh, God, that is incredible. Well, it's good to know. I'd hate not to know these things, huh? Oh, my Lord. Right? Lord have mercy. Oh, my God. Shut the back door. Yeah. So that's good information to have, I think. All right. So those yens were awesome. Those yens were awesome. Let's do some yens, man. I want to do the other ones. I want to do... So I was up late last night with the swing trading group. And, well, actually, the swing trading group met at 4. So around 4 or 5 p.m. yesterday, we talked about the likelihood of yens continuing their down. Okay. And, well, you can see I drew trade plans. Down is down is down. It's sure hard, though, because we've been bullish for so long, it's hard to become a bear, right? Well, right now, there's, once again, one last chance of hope for a bull. And that we're on the weekly 21. But I don't know. I'm not going to play it that way. Okay. Do I have an email? I do have email. Let me check my... Oh, I'm probably in the wrong email. I got to go to the other email. Okay. So here was the email the AI sent me this morning, right before we met today. Actually, 6:15 a.m. Amazon up, Google up, pound dollar up, Kiwi dollar up, USD yen down, FTSE down. Everything else went up. Oil down and gold up. Nice to know, right? It's cool, isn't it? You want to check some of these? I got this email 2 hours ago, almost 3 hours ago, because it's almost 9. So 3 hours ago, 2.5 hours ago. Let's see. So we'll do like the pound dollar one, right? Since it's Forex. Do you want to check this out? Channel up identified at 5 o'clock this morning. This pattern is still in the process of forming. Possible bullish price movement towards the resistance, 129, within the next 11 hours. Okay? So a trade from 128 up to 129, 100 pip little setup. You guys want to take a look at that? Of course you do. Good. Pound. Okay. I guess let's just clean this up. Let's do template, daily confluence, bullish. We'll try just a slightly different trade. Okay. So it says, again, let me just pop. Can I pop this stupid email up? Yeah. Let's try to do it right. By the way, would you pay 60 cents, 61 cents a day for this email? Look at all the trade plans. Notice it's 3,000 more, well, 7,500 trade plans it didn't give you. Out of 7,500 charts, these are the ones it found overnight. I'm going to charge 61 cents. So you would probably wake up in the morning, because it comes out at 6 o'clock a.m., and you'd roll out of bed, you'd pop open the laptop, you'd get the email, and you're like, okay, I'm going to go check out pound dollar. Okay? Take it from 128 to 129. Let's take a look. And you open up your hourly chart maybe. And the 128 was here. And it suggested you could take this just shy of 129, which was, does anyone, let me bring it back. Oh, I grabbed the wrong one. Where's the actual popped email? I guess it's that one. Okay, 128.95. Now, I use pivot points. So if it was me giving the advice, I would have told you to get out of there. That's 128.95. Oh, it's the same number. All right, so that trade is done. Traders would have put you into a 100 pip move today before the news came out. Let me know if I'm a liar, but this was sent at 6:15 this morning. It's 9 a.m. and it just made 100 pips. Okay, USD yen target 145.57 on the 30-minute chart, downward channel, identified at 4:30 this morning. 4:30. So 5 hours ago, right? This pattern is still in the process of forming possible bearish price movement towards 145.57. 145.57. 145.57. So we can go look at the yen. $145.57, right? Did I remember that right? Let me double check. 145. That's still ways down there. Holy crap! That's a heck of a trade. All right, so let's book this. It's a 30-minute. I'm gonna have to do it this way, right? Open this up. 145.57. Just triple check that I get it right. 145.57. 7.9. I'll even put the 7.9. 7.9. Okay, that's our minimum target. Let's back out. Yeah, there's some meat on this bone still, huh? Oh, look at that. It's a monthly pivot. Oh, dang it. All right, good to go. All right. 145.57. But we were at 147.40. 147.40. Where was that? 147. Oh, I nailed it. That is 147.40. Let me actually just put it perfect. 147.40. Oh. 40. Yeah. Oh my God, look at. So at 4:30 in the morning, it said sell here and target that. Lordy, lordy, we likes to party. We don't cause trouble and we don't bother nobody. That is amazing. So that email will be 61 cents a day. Okay, Jay wants to know, why is the economy booming despite the Fed raising interest rates? Okay, in response to COVID, oh, by the way, let me just draw this out. That's the plan, just so you know. So, by the way, this email is done. It's been sending me these emails for a week and a half. The AI is done on the email side. Oh, I do okay, Raj. I'm trying to make it cheap. Also, you know, I got to recoup my costs of building, right? But if you want me to charge more and it makes me look more powerful or something, but I get you. It's like, why even deal with it? I'd like to get some costs back, but I do all right. Like, yeah, don't worry about me. But as an entrepreneur, I'd like to get some costs back, that's all. Yeah. I think all traders, by the way, great comment. I know you're poking me a little bit, but, I do understand. In particular, there are lots of, the the guru stuff. I've been mired in that mud forever, so I get it. But here's one thing that I do believe. Every single trader needs a side hustle. Now, in the past, what I recommended is while you were learning how to trade, that you, drove Uber at night or something, and saved the money to capitalize your market, or to capitalize. Because, look, when you run a hedge fund, okay, now I've done over $1 billion a month. Okay, I've had my own dealing desk just to clear my trades. So I'm not your average Joe, Raj. But even then, you're going to need a side hustle, because here's how the industry works. You raise millions of dollars, you get regulated, and you have to pay for all the regulatory compliance, and you have to pay for all the accounting and all the audits and all of that stuff out of 20% of the profits. And even now you're getting squeezed where you might only be making 10 or 12%, not 20. So the clients get most of the money. So then the money comes in, but then you got to pay your taxes, you got to pay the compliance fees, and I would spend hundreds of thousands of dollars a year on compliance. So then whatever's left after all of that is what you live on. And do you understand that that leaves you with basically nothing? You need 20, 30, 40 million dollars just to make a half decent living as a professional Forex trader. And for many people, they can't fathom raising $25 million. Okay? So what I recommended for the last 20 years is that you get a side hustle, and then the 20 or 30% that you're making per year as a Forex trader, you never spend. So you, over the course of 10 or 20 years, you're never taking money, you're never withdrawing from your Forex account. And it gets bigger and bigger and bigger and bigger until the point where you can withdraw some, handle your living expenses, but it's not a significant drawdown in year 12. But see, in year 1 or 2, if you make 30% of the profit, but then you take 50% of it out to pay for your expenses, you're never going to compound and grow your account. You'll never make any big money. Okay? So this is why you end up trading as a hedge fund. Now listen to this, because most people don't get this. You trade a hedge fund because you try to live on the money, the 20%, and really after expenses and stuff, you're lucky to get 10% of the profits back, but you're trying to live on the 10%. And you have to realize, as a hedge fund manager, you're not driving Lamborghinis. You don't have a yacht. Okay? You don't. That's a pipe dream. So how do you make any good money? Well, you're living on the money your customers, your clients are paying you, but you have the internal fund. And if you watch Billions, there's a couple of episodes where they talk about this. Ooh, the internal fund? You have access to the internal fund? So this is like a real thing. What's the internal fund? Your money. So the clients give you 20% of their profits. You keep 100% of your profits. So if you make, let's say, a 30% return, your money is growing, compounding 30%, which means every 2.5 years, you're doubling your money, 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 double, 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 double. You might double your money 6 or 7 or 8 times in your career. Holy schnickerschnocker. 100 becomes 2, 2 becomes 4, 4 becomes 8, 8 becomes 1.6, 1.6 becomes 3.2, 3.2 becomes 6.4, 6.4 becomes 12.8, and holy schnickerschnocker. But you're living on 300 grand that your clients are paying you. But you got, and what happens, and trust me, do the research. You'll see there's a point in which hedge fund managers close their fund. They don't want new customers. In fact, they get rid of sort of the fringe customers because running a hedge fund's expensive. It's time consuming. It's stressful because you're trading other people's money. You care about them. You worry about them. It's a headache. But once you've grown your money into the big money, now you don't need outside money. So you keep all the easy stuff, the guys that you love you and you love them, and you're like, okay, we'll just keep this relationship going. You fire everybody else, and now you have a very sustainable business, but it's the internal fund. It's the internal fund. No, Brad, you're talking about QuantBox. That's not where that comes from. That email will come from traders, but that hasn't launched yet. Put your name on the list, Brad. Guys, if you want your name on that list. Okay? So anyways, guys, what I'm talking about is what Raj is talking about. He's like, dude, if you're such a big shot, why are you trying to pitch people something for 60 cents? Are you so freaking desperate that you're begging for a penny? You're begging for $1? No. No. But I understand that. And yeah, but the answer is no. If you know me, so for example, I've been working in the nonprofit world for about 30 years. I now sit on a board of directors for a nonprofit, and I manage endowments, 3 endowments. Okay? So all I'm saying is, look, I have a choice. I can make this a big money maker and buy myself a yellow Lamborghini. But I already have a fast car. I already have a big house. I already have all of that. There's nothing more that I really need. So my other choice is I can make it as accessible as possible, hoping to cover my costs. So if I can cover my costs, good, let's do that, okay? But, dude, I already did gold. Where were you? Okay? Okay? So I'm making it accessible. So for the email, did I delete it? I deleted it. Well, I have this. Let me pop it again. The email that's going to be 61 cents a day is here. So if you want to be notified when this comes out, I might start doing this like on Monday. Put your name here and I'll let you know. I'll make an announcement. I'll give you a link. You can sign up. Okay. What did I say? No, it's every day. Every day. I look at it as like a demo. But I know some people want the help and assistance, but they don't have any money. So my solution to this was I'll do the monthly subscription at $19. It's 61 cents a day. And it'll push you in the right direction. Now, I hope you use, I have better tools, real-time online stuff. But if you want to just say, like, I want to see what kind of crap this guy pumps out, dude, I just showed you 2 trades that are amazing. And I randomly picked those, by the way. So it's a way to get started. But traders.co does a lot more amazing stuff. So it should be accessible. So again, whatever. All right. So let's zip around. I zip around, yeah, zip around. Whoa, I zip around. I want to do the stock market. It's opening soon, huh? Once again, Ed, put your name on the list, but go to the, like, for example, stocks, commodities, currencies, crypto. It does stock and stock indices. Again, let me pop the email. Sorry, guys. Just answering questions. It started out with Amazon, Google, pound dollar, Kiwi dollar, USD yen, the FTSE, oil, gold. And that's it for today. Now, tomorrow there might be more, there might be less. Because this is the only thing it recognizes. AI wrote this email. I didn't write this email. It wrote it. And so it looked at the charts, because some of these, notice, these are all just like the time, right? So last night, early this morning, 4:30 in the morning, 5 o'clock in the morning. Okay, last night. So it's looking at these things and it's just saying, like, what does it see now? And sends you an email. It's all brand new stuff. And so tomorrow at London lunch / New York Open, it'll just tell you what it sees. If it doesn't see anything, it won't tell you anything. But it looks at 7,500 charts. It's going to find a pattern. It only does pattern recognition. It's only technical analysis, guys. Right? Okay? All right. All right, so let's get on with it. I want to move. So today is a big deal. I was really worried about this rally back up. And you can see I have written out SPXS. Does anybody know what that is? That's right. So in there, I shorted, and I think like the next day, which would have been about here, I exited. Because I thought there was a real chance that we could have something like this. I'm heavily long, just so you know. Okay? Right? I've been long this for decades. So a hedge is a hedge. That's right. So I hedged it, and then I removed the hedge. And I think I hedged, the same pattern. And it was either this one or this one. Might have been the other one. But over the last month or so, I've hedged a couple of times because I was worried. And that's when you hedge. Okay? And in fact, I have so much transparency that I run a group that works with me to manage my retirement pension fund. And they make decisions for my money with me. We're meeting on March 20th to discuss the next round of investing. The last time we met for managing the portfolio, they invested $10,000. It's an institutional account, like a Wall Street institutional account. It's my legal pension fund. They see the money. They discuss the money. They see the portfolio. They discuss the portfolio. They put forth ideas. We debate. We talk. And then we make investment decisions. And I say, okay, guys, how much money do you want to put in this asset? How much money do you want to put in that asset? And they make the decision as a committee. And then they watch me enter the trades into the market. How's that for transparency? So I left some cash around to hedge. And I've done it a few times, and the hedge worked in the sense that if the market had fallen, I would have done very well. The market didn't fall, but I had locked in that price. So now I've removed the hedges, and I'm making the money. The reason I use a 3x short is that I could take $5,000, for example, and it's equal to a $15,000 short. Now, we have a lot more than 15,000 long, but with the little bit of dry powder that I have for reinvestment, the dry powder is for reinvestment. But while we're waiting in periods of increased risk, I could use 5K to make 15 and offset some of the risk. Okay? And now we're in a new world, it looks like, for now, technically speaking. See, this was so a couple of days ago. And now we've made a higher high. Okay, let me zoom in. And the way that I teach is that the reason I draw the higher high is because if you get above it, you can buy it and use it as support. I call this a role reversal. Direction daily has potential for compounding. Well, here's the other thing. SPS, SPXS pays, I think it's 6.8% yield. So I make the money on the way down plus 6.8% annualized. And you have to understand my pension fund, and more particularly the endowments, the focus of the endowment is how do you minimize vol? So you want to lower volatility. I can't control the stock market. The stock market's going to go up, the stock market's going to go down, but when it comes to managing an endowment, you have to make investment decisions based on you can't rely on the stock market always going up. There will be periods in which the stock market does not go up. It could move sideways or it can move down. So therefore, if I'm not going to try to control the market, then I can control the volatility. And I do that through beta. So this is what we discuss in my Council of Investment Advisors. How do we buy beta and then control it based on our assumed? So now we have to look at it as traders now. We know likely when the stock market is likely to go up and down, and therefore we want to own the market, but how do we control the vol? And we do that through a beta rotation. And so we will suffer on the way down, just not suffer as much. And then we'll benefit on the way up by rotating out of low beta into higher beta. But you have to know when to do it. Well, we're traders. So we know how to do that. So then we use our trader mindset along with the investor mindset. But at the end of the day, the goal is to lower the volatility and collect income. Because, right? Because an endowment, so we can say like a museum, for example. Okay? A museum. How does that work? Okay, so let's say the museum has a $10 million endowment. And through your financial engineering, you lower the volatility of the portfolio and you collect a 10% income. That means every year you're going to have a $1 million in income. Well, you're a hedge fund, so you're going to keep 20% for yourself. So that leaves the museum with $800K. So the budget for the museum is $800K. Now, they might charge some money at the door and bump that up. But this endowment, year after 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 year, in perpetuity, will provide $800,000 to the budget, and the $10 million never goes away. In fact, over time, it might go to 15, and therefore this goes up. But then with inflation, whatever. But here's the thing. The museum needs to know, because they're not finance people, they're museum people. They want to know that they can pay the employees, the staff. They can pay the rent. They can pay the insurance. They can save some money and bring in special exhibits, and they can do some marketing and advertising and charge some door sales stuff. But you see how the outcome is much different. And so this is what I do for institutions. And my Council of Investment Advisors helps me do this with my own pension. Pretty cool, huh? What a great way to learn. Okay. We started at 50,000 and now it's 68,000. And I have 40% less volatility than the S&P 500. It's insane. Insanity. Yeah. All right, there's our peso. Yeah, me too, Jean-Guy. Yeah. Beautiful, huh? Lovely. Oh my God, just so beautiful. Now, these are dangerous pips because we're outside of the target. That's the monthly target, by the way, for USD Mexican peso. Every single boot camper here knows the pattern. Central pivot to S2. That is now fulfilled and we're done. What happens next? Nobody knows. That's the pattern. Well, it looks like good news is good news again, and I'm okay with that. Ba 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 ba. Bum 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 bum. Holy smokes, huh? What a great month. Arve's crushing it. Yeah. Well, so now we're at bottom, and yeah, we have to be concerned about that. Hang on, I gotta do something. Bu 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 bu. Hang on, I gotta copy something. I'm just responding to important development thing. Mm-hmm. All right, cool. What do you guys want to do next? You want to look at something different? You think about that one. What about a little day trade, scalpy type trade? Would you be interested in something like that? Up to 791. Up to 91. A pissy little trade like that. I'm not interested in trades like that, but traders finds them as well. Traders says there's a 67.83% chance of these 28 pips. So again, I look at that and I would have to justify it first. But if it points me in the right direction, I might be okay with it. But I wouldn't do it because it says it. Past performance does not predict future results. But statistical analysis of the past shows a little trade like this. What are your thoughts? Not my cup of tea. What it's saying is it has drawn this as a breakout. Oops. You know what? Why not? Instead of just telling you, I'll just show you. Snip. Snip, snip, snip. Let me do a snippy, snip, snip. I got this email while we were talking. Okay, I got this email. And it saw on the pound Kiwi 2 different bullish setups at the same time. So I don't know anything about it. It just knows it technically. So you see how it's drawn it. So it looked at it like this. And it looked at it like this. Okay. And so it believes we're in an apex with upside potential, right? J-Man says, is that a pot and handle for me? I don't know if you're joking, but I'm infamous for not liking. I'm not so much a pattern trader. I'm very much a fundamental trend trader. That's why this AI is interesting, because it might. I'm hoping it teaches me to be a better technician. A pot and handle, a cup and handle, a saucer. I don't know. I don't think that way. So, anyways, I guess it's more like this, isn't it? Yeah. So, anyways, little pissy little scalp. If I were taking the trade, I'd probably go higher than that. Guess we can do it for fun. What was it? 91. All right. All right, so whatever. We'll have fun with that. What else is going on in the world? What else do you want to do? Oh, Bitcoin made it? Cool. Yeah. Well, I have it close. Yeah, at all-time high. Yeah. So what do you guys want to do? Hello? I got to watch the stock market, I guess. Yeah, doing well. Hey, pretty mama, yeah, that's good. Making the money. Let me check my pension fund. Uh-oh. How we doing? I'm gonna check the fund. Let me log in. Logging in. Log in. Fingerprint. Log on. NASDAQ is up 0.5%. S&P 500 up 0.38. Dow up 0.3. Cool. The big thing I care about right now, well, I don't know if it's a big thing, but a key thing is I'm very interested in what happened to Quant Box? Just amazing. Where did Quant Box go? Quant Box. Oh, here it is. The 10-year, the yield on the 10-year. Yeah, baby. Okay, that's good. That's good for me. So I bought this asset, which is another way of saying I shorted this yield at 5.0. And we're getting closer and closer back to 4.0. That's good. That's good. We like that. That's typically risk on. Okay, nothing major yet going on. Take a look at the scatter plot. Let me zoom in for you. Okay, Bitcoin doing well. Let's get rid of that. And the yens are still down. Yeah, all very shortable. So last night, like literally, well, yesterday afternoon at the market close, I'm like, you know, because these had dropped and then they were up here again. I'm like, that looks like a short to me. And they are down. They are. Let's take a look at global indices. FTSE down. FTSE's been a dog with fleas. Yields are down. That's good. And that should be shifting over here over time. Meanwhile, this is everything QuantBox expects to be bullish. Okay, that's the score here. So everything to the right, QuantBox expects to be bullish. And then over here on the left is actually what's happening right now. Is it making money today in the market or is it losing money today in the market? So you know, these things are flat. Dow is flat. DAX is flat. These things are up. And the thing that's up the most is what QuantBox is most bullish on because it's furthest to the right. The further to the right, the more bullish QuantBox is. So the fact that this is to the left, QuantBox isn't that, it's actually a little bit bearish. So right? Because it's here, it's got a score of -1. So QuantBox is actually bearish and it's not performing. And QuantBox would say, well, that's logical. That makes sense. You're like, it makes sense. How does that make any sense? Well, global stock market indices, you go to the Dow, and look at the scoring here. Look at the technical analysis. It's projected to head down to 38,364. And we've gone from bullish to neutral and now is trying to tick bearish. I mean, just ever so slightly, but things might be changing. So, for example, 68% are long. This is institutional investors. Or 69% are long, but that's why you need the COT. Okay, 69% are long, but is it changing? And so now you organize this, and there's your Dow. Yeah, and it's still ever so slightly bullish, but not because people are buying. Some bears have gotten out, but if the market starts to fall again, they'll get back in. So it's more of treading water. And here, by the way, there's the 69.2 that we saw on the other page. Cool. So we can see there hasn't been a flight to safety yet, but it's by far the least attractive of the stock indices. If you look at the Japanese stock market, way nice. Look how bullish it is. See, Dow had less bears. Nikkei had more bulls. Do you see the difference? Can you make the distinction? Less bears is not necessarily bullish. Okay. This is actually more bulls. What about NASDAQ? Lots and lots and lots of money has come out of NASDAQ. Smart money is already taking profit. Smart money is already taking profit. Smart money is already taking profit. And at this point, the market is 50-50. What? So why is this 70% long? This is what I do for my endowments. I talked about it. Remember? I have strategies that lower vol. You remember me talking about this? I lower vol through the strategic management of beta, and I do it through rotation as market conditions change from risk on to risk off. What does that mean? You rotate out of NASDAQ and into Dow. NASDAQ is high beta, so I get out of my high beta and I buy low beta. I rotate money out of high beta into low beta. Look at the market, guys. NASDAQ is now only 53% bullish, and Dow is 70% bullish. NASDAQ's losing huge amounts of traders, and the money is going into Dow. They're buying the lower beta. They're rotating their risk as a form of risk management. I teach this stuff, and we use my own money, my real money, and actually do this. So if you want to learn how to run an endowment or become a professional money manager, you need to join my CIA group. It's a small group. It's just a handful of people. But there's proof is in the pudding. There's the data. I have the data. This is what professional institutional managers are doing right now. It's one of those secret Harvard asshole things. Huh? Well, I'm a Harvard asshole, so there you go. All right, well, look, I guess we'll go. You guys are super, super quiet. Maybe I'm the only one here. Oh! Ooh, look at that. Up. Give me the up. Love it. Love it. Up. It's up. Very nice. Yeah, very nice. Yeah, right on. Well, let me say goodbye. I hope this was educational and informative. I hope for some it was an eye-opener that there's a whole different way of trading. Yeah. I am a macroeconomic trend trader. I love fundamental analysis. I love technical analysis. And being an entrepreneur and a past venture capitalist, I've invested heavily into artificial intelligence to help me be a better trader and investor. And I share this journey with you because this is a get-rich-slow scheme. This is about building sustainable businesses of trading and investing in the financial markets. And to do it well, to do it sustainable, to do it with low risk and consistent returns, we need good information. We need control so that we can align our behavior with real market forces. No guessing, no opinions, no I think, no I want, no it should, but just reality. The data I get comes from the economic staff at the Federal Reserve. But also I tap into every major central bank around the world. Where do I get my information for New Zealand? From the Reserve Bank of New Zealand, or from the Reserve Bank of Australia, or from the Bank of Canada. Or the ECB, or the Bank of England. This is where I get my data from. The OECD. Real data so that I can make informed business decisions. And my business is trading and investing in the financial markets, whether it's stock indices, commodities like gold and oil and silver and Bitcoin, or currencies. There's a lot going on in this world, but it's all money. End of day? What do you mean by end of day? Like TradeRs, for example, is right? It's real time. Some Quant box stuff is end of day because it's the only way. It's the only way it comes. It's the only way you can get it, right? But most of it's real time, or nearly real time. No, I'm not an order book trader, J-Man. Here's the problem with me. I don't care about how other people trade. And to know, to see oh, there's a bunch of orders here and a bunch of orders there. I couldn't care less. It's nice to have the volume and know that these are assets being traded, but I already know that anyways on the long run. But to make a trade because I see a bunch of stuff here or a bunch of there, that's not me. I'm not saying it doesn't work. It's just not me. But part of my life of experience is I was invited to trade on the, not to trade, but to hang out with the trader at the Chicago Board of Trade. So I was on the floor. And we went to, the S&P 500 trading pit for sure. Actually, you walk into a big hall and the first thing you're in is soybean meal futures. And I'm like, oh my God, look at me, soybean futures, right? And then I'm like, this room's so big. And the guy that I was hanging with, he's like, oh, well, this is the small room. This is where we go for the S&P 500. I'm like, whoa, what? And you go into an even bigger room. It's huge, man, like football stadium. And he's like, over here is the S&P 500, and on the other side is the options on the S&P 500. They're right next to each other. I'm like, oh, that's so cool. And, well, the guy I was hanging with traded the 10-year T-note. And he's like, I'm over here. So you go past the S&P 500, and it's 1 or 2 pits further from the door and to the left. On the right, there were some other pits, but this is where he was. And you get there, and each trading pit was quite different. They all had different rules, and some you could have computers with you, and some you could not, and some, it was pure open outcry, and some were not. And then, so you get to the 10-year T-note, and there's a pit, but over the years, they just put computers. So there was cubes. It was really strange. Little cubicles, really tiny cubicles, about the size of a phone booth. And you pretty much stood. There was maybe bar top type stools for like one person. And there were all these little computers kind of all arranged together like a bunch of people at a Starbucks. And there was no open outcry. You just stood or sat at your computer, and you looked at the screen, and it was order flow, that type of order flow, right, on the ladder. And he's like, this is what he told me. He said, you see all these orders up here? I'm like, yeah. And he said, you see all those orders down there? I'm like, yep. He's like, it's all bullshit. He says, it's just flash boys. So what'll happen is you'll think there's orders up there. So you bid up to the order, and then 100,000th of a second before you hit that spot, the orders just go away. They just vanish. It's like me doing this. Look, here's a bunch of orders. Right? You ready? Now imagine a computer's doing it. Look at all the orders. Look at all the buyers down there. So, right? And what they're trying to do, let's say, is have you get people out or get people in or whatever. Oops. Okay. And they're spoofing you. And then as soon as you get to the price, it's gone. So I'm not saying that that's always the case, but I'm telling you, this is the advice I got from someone that traded on the floor of the Chicago Board of Trade for decades. That's where, actually, so I did pivot points back before then, and I spoke to him about pivot points. But do you guys want to know what he actually did as a professional floor trader? I'll give you the 1 minute outline. For 20 years or something, maybe longer, he had a seat in the Chicago Board of Trade, and he sat there trading T-notes. Do you want to know what he did? He traded quadruple witching, what's known as rollover. That's it. So imagine there's a January contract. Okay, a January contract for corn. Okay, I'm just making it. It could be anything. S&P 500, whatever. Okay, and in March there's a new contract. There's a March contract for corn. Okay. What are the bulls going to do sometime before March? I guess it'd be April, right? Sorry, it'd be April. Okay. What would they do sometime before March 31st? And then do what if they're bulls? Okay. They buy in January and it expires March 31st. Or it'd actually be a little before that, wouldn't it? Quadruple witching is probably more like 24th or something. Whatever. Come on, just go with me. Roll it over. What does that mean? Okay. They sell J and they buy A. So that's what he does. He waits until the volume starts to occur and people that own January start getting out. So he sells January and he buys April. And the money leaves January and rolls over to April. And he makes money. That's all he did. 4 times a year, he would work. Out of the entire year, he worked 12 weeks. And he did it for 25 years. And if I didn't get that perfectly right, like he's like, no. I buy it from them. And no. I think that's what he did. Maybe he did the opposite, but whatever. He traded the fact that there was a market. I'm pretty sure he would have front run everybody, started selling the January and buying the April before everybody, right? And then what? So if he's already selling January, what happens when everybody else starts selling January? January falls. And if he already bought April, he already owns it. He bought it 3 weeks early. Well, then April starts going up. You see? Is it arbitrage? No, not really. But it's a spread. Because, right, this dies, right? So it's more of a front run. It's a spread more than an arbitrage. But you're close. Kind of. Because you're selling one. But remember, you're selling, the price goes down, and you're also going to take profit. All right, well, I got to go. That was real, babe. I got to jump. Thank you to FXstreet for being wonderful, kind-hearted, tall, good-looking people. I appreciate you, FXstreet. Thank you, moderator, for moderating like no moderators moderated before. There's nothing moderate about our moderator. We have an extreme moderator. You just witnessed extreme moderation. Thank you for Traders Way for being a good broker that doesn't trade against you. And if you want more, if you want to learn more about trading, investorbootcamp.com, quantbox.co, traders is radars for traders. Traders.co, launching maybe as Monday. If you guys want the email, it's already sending me the email. I could possibly maybe spend some time over the weekend and set that up. Okay. Linda, just go to investorbootcamp.com. Okay. That's education. All right. So I got to go. That was real. Have a wonderful weekend. Peace on earth. May the pips be with you. May your profits be above average. Oh, and one last